Hello traders, and welcome back to the Crude Oil Trading Environment series, which is a three-part video series where I go over how I look at the trading session before I start trading each morning and sort of paint the picture on what the environment might be giving us and how I plan to approach the day. Now, this is not a series that shows you entries, exits, etc., but it can give you an indication of the type of price action we can expect for the day, and you can trade accordingly. So this is video 2, and if you remember, video 1 covered inside days, which were range type of days where the current price action was trading inside of the previous high and low. So now we're going to do the opposite situation, which is an outside day, and these tend to be trending days. So the last one was ranging, this is trending. Now, let's get started. Just to cover the risk disclosures, trading futures carries a high level of risk and it may not be appropriate for all investors. Under no circumstances shall the company or myself have any liability to any person or entity for any loss or damage in whole or part caused by, resulting from, or relating to any transactions related to futures. Obviously, this presentation is for educational purposes only. I am not a financial or investment advisor in any way, and any past performance obviously is not indicative of any future results. So please be careful. Okay, let's get started. So let's go down the agenda. First, we're going to define what an outside day is, and I will show you some chart examples. Then I'm going to show you how I look at certain key areas of interest given that context. Then we can talk about some high probability price action destinations where price might want to try to get to. Like I said, this is not a series that tells you exactly how to get in and get out. That's very strategy specific, and that's not what this series is about. But I can kind of give you an idea of generally how I think about where price might be trying to go on these sort of days. And then on an intermediate level, I want to give you a couple of tips regarding counter trend traps, because this is the type of day that can really chop you to pieces. And take that from me, it was my nemesis for many years. So here we go. So the definition of an outside day. So an outside day basically is where current price action is outside of the previous day high or low. So therefore it's outside of the range. So just like before, you're going to mark off the highest price and the lowest price of the previous day. And you do this at 7:45 a.m. Eastern time. This is the way that I look at it for crude oil every morning. And I like to do it at 7:45 a.m. because that's ahead of the 8 a.m. to 9 a.m. volume burst that might appear each morning as the New York session players start to come in. Now, of course, just like with the inside days, this can change throughout the New York session. So you can have an outside day where you're starting outside of the previous day range and somehow you pop back into it. Now, these are transitional days, which I will cover a few examples of that and how I look for that in the last part of the series, which is video 3. Just to review, the time frames that I use are 60. I use daily, but for my highest time frame, but I also use 60-minute. And then my intermediate chart is a 3800 tick chart. And lastly, on an execution basis, I use 350 tick chart. Sometimes I use 500 tick charts. But as we've said before, any time frame will show you the previous day high and low. And that's sort of how we're anchoring ourselves in the morning and seeing where are we in that context. So let's go through a couple of visual examples of what an outside day looks like. So here's an example where I highlight the previous day session, which is this left side, and on the right side is the current day session. So remember, we're pretending that we're up to here and none of this has happened yet, because this is just for education purposes. So we kind of have to pretend it's not there. We're just looking for examples, and this is something obviously you would back test, and then you can forward test it in real life hours and see how it goes. So at 7:45 a.m., we're about here. Now, as you can see, we're above the previous day high. So that tells me right there, we're an outside day. We're outside of the previous day range. So what am I thinking? I'm thinking that I need to pay attention to this key area. So as you might know or think, previous day high and low previous day areas in general. So previous day high, low, open, and close can all be areas of interest for price to want to test, retest, reject, break out from, etc. So in this case, because we have already broken out, I want to pay attention to the previous day high and mark it off and see what happens if price gets back there. Now, if you recall from the inside day strategy, we're looking more for inside day ends in play. Now we've already broken out the end, one of the ends, the previous day high. So I'm not looking for necessarily rejections to come back in. Yes, that can happen. But for that to happen, we have to get back inside this previous day high. So I would notice, so no matter what, it's still a key area for me, either as a tapping point where it would retest it and continue on up because it already broke upwards, or we would break under it, come back inside, and maybe we would turn into an inside day. Now that's something I will show in detail with examples when I cover the transitional days. And there's reasons that may happen, and it has to do with something to do with, what's happening on the higher time frame. We never want to forget that we're trading with multiple time frame analysis, because this is just our execution chart. I just pinched it in to see everything on one chart, but at the end of the day, we care about key levels from the higher time frames because those are the institutional levels. That's where you're getting the huge moves off of. So back to this. So we mark off the previous day high, and here we go. We get a test right there, and we continue on up. So there's a few things to note from this chart, but I will come back to this example in a couple of slides. Right now, I just wanted to highlight how to see that it's an outside day. So let me give you another example. On the short side, previous day is on the left side, current day session is on the right side. We are up to this candle right here on the 7:45 a.m. session. Nothing else has happened. And we see that we are underneath the previous day low, meaning it broke out to the downside. So we are going to be paying attention as to how it interacts with that previous day low. Why? Because that was a very key area that broke out. So the choices are, we can either come back and test it and continue on down since it already broke downwards, or we can come back. This can just end up being a false break kind of situation. We come back inside and we may hold it and stay inside, and then all of a sudden maybe inside day strategies come into play because that changes the context. So those are a couple of things that can happen. So this is how you see an outside versus an inside day. So what are some of the questions that we need to ask ourselves, just like we asked ourselves with the inside day? One of the key things when you're showing up at 7:45 a.m. Eastern time is you want to see what the overnight sessions did. What did price action do over the Asian and the London sessions? Was a key weekly level rejected and then you saw an impulsive move during those hours? What do I mean by that? I mean that, pretend this is the previous, let me use another color. Something a little bit lighter with this dark background. So let me use this yellow. So let's pretend that this is the previous day action, something like that, anything. And we're up to the next day, trading day. So now we have Asia, and then we're going to have London. Now, if during Asia, we went like this, and then London went like that, and then that. So overnight, London did something and then gave a very strong impulsive leg, and we broke out of the previous day low. So all of this is the context. The context is that London had some strong move out of nowhere. Is it out of nowhere? Well, that's what we need to look into. So we need to check to see if this was a major higher time frame level. So for example, and we'll go over what I consider some key weekly levels, but you might be considering maybe this is the previous week high, maybe it's the previous week low, and it rejected very strong. That might tell you that now we have a bearish bias and we broke the previous day low. So that might be a little indication, just reading the context of the overnight price action, that we may have a strong, not saying it's going to move like that, but we may have a strong trending day to the downside. So you want to pay attention to what did price do overnight? What did it reject from, if it rejected at all? Okay, now we want to note the swings in price, the way the price action looks overnight in terms of impulsive and retracement moves. Now, as many of you know, price moves in that way, especially in a trending environment. So an impulse move is going to be very strong in one direction. Retracements tend to be more shallow. Then you have an impulsive move where you'll have, if this was an uptrend, you have a lot of green candles, mostly green candles, and then you'll have very small pullback like that before it starts shooting higher again. So these are the impulsive legs, these are the retracement legs. Impulsive legs, retracement legs. So this is a very common trending structure. Now, if you're looking at the overnight price action and at the breakout point, so you already broke out, we're under the previous day low, so we're outside day on the downside, and you're watching that all along the way, every pullback was extremely shallow. So very shallow coming down, all the pullbacks. So we might end up having a hyper trend kind of day. Hyper trends are very difficult, personally for me, because of my style of trading, to catch. They just feels like it's falling super fast. I enjoy trading Fibonacci pullbacks. So for me, these are so shallow that it barely retraces for me to enter. So this is all painting the picture for what kind of day this could be. So we'll talk more about this hyper trend situation, because this is a counter trend person's nightmare. And then we already kind of spoke about how does price action react to the previous day broken high or low. So if you broke the low, how do you act when you come back? How did you break it? Did you break it strong with a bunch of down candles? Are you lingering there, like right on top of it? Remember we said inside days, sometimes you do that. Sometimes you linger on it and then, a little poke and then you come back in. So you want to pay attention to how it's reacting around that area. A couple more things. So you'll notice with crude oil that, and I kind of showed it a little bit in the last video, where you have the daily candles tend to overlap a lot. So what does that mean? From my personal back testing, I've seen many inside days, more inside days versus trending days, and the way that I defined it. So what does that mean? That means that many times you're going to have those candle overlaps where you're inside the previous day range. And we already kind of spoke about how you can look at that. You look at the inside day and it's in play. Now, why am I bringing this up? I'm bringing this up because no matter what, you can still have a trend. So let's say the daily had a couple of two down moves like that, two strong daily candles. And then we had a retracement, little consolidation period. Then we had another daily candle down like this. Now, if we go down to a 60-minute, you'll notice that it's a downtrend. So impulsive moves coming down, retracements coming in, another impulsive leg coming down. So what we want to notice is, where are we in terms of the last couple of days? Why do I care? I care because price will only consolidate or trend for a certain amount of time, a certain time period. So do we know that time period? Not necessarily, but every instrument sort of has its behavior that you can study. So for example, when I know we had two inside days in a row, so let's say this candle right here traded inside that big down one, then I get another inside one like that, it starts to increase the probability that we're going to have a strong breakout day. Why? Because price can only consolidate in a tight range for so long before it's going to want to seek better buyers or sellers. So there's going to be a breakout point. Let's just say that. So when I'm on this third day, I will start to pay attention. If that were to be the outside day, we may get a very strong trend day because you're breaking out after several days of consolidation. Now, if we're on day, and I'm making up like the 2 or 3 day thing, you got to do your own back testing and see how many days tends to be the consolidation period versus the trending period, etc. But let's say you had 3 strong days that broke out to the downside like this. I'm still obsessed with the downside. I don't know why. And we have, let's say we have 2 outside days. Okay. Now, what are the probabilities that I'm going to have candles with this size in this direction coming down, breaking out like this again? What are the chances? So I'm not saying just make up a number. I'm saying do back testing to see how often does that happen. Does price just keep shooting down forever like this? Like talking about, let's say $5, $7 range candles. That's pretty big in oil. I mean, maybe not these days, but it is a little bit large. So we may anticipate that a consolidation period is about to start. So when you get that inside day, we may have a couple that follow. So this is all trying to read price action and context over, not just yesterday and today, but over a series of days, just to get a bigger picture context. Okay, the last thing on this slide is, and this is a bigger topic, but just kind of throwing it out there just for a little bit extra information, is trying to pay attention to the biggest candles out there that institutions might be trading. Maybe they trade quarterly candles, I don't know. But I'm talking about monthly and weekly candles. Now, obviously, it takes a long time for a monthly candle to close. Many, many, many days beyond maybe, if you're a day trader like me, I'm in and out in like 1 hour at most, usually 1 to 2 hours, let's say. So monthly candles sounds almost too big. But I do pay attention to kind of like the color of the candle. I call it the color of the candle, but even though I use like light blue and dark blue as my up and down candles, but let's call them red and green. Red for down candle, green for up candle. Now, I do pay attention. If we have a red monthly candle, meaning a bearish, I'm going to call it a bearish monthly candle. We're trading underneath the open of that candle for the month. And the weekly, for the week, we're also, so these are 2 different time frames. We got the weekly, that's also a red candle, trading under the open of the week. So right now we have 2 time frames that are down. Now the green, the daily candle for the last 2 days has been up. The last 2 days has been up. This is, let's say this is Wednesday, Thursday, Friday. And now we're on the next day, and that candle breaks out of the previous day low. What does this tell me? This daily candle turned red. It turned red because the open, let's say, was inside the range. Now we're under the open of the current daily candle. So we're under the overnight price action. So we're red. We broke through previous day low. And now we're the same color as the weekly and the monthly. So down, down, down. We have 3 time frames facing down. This is what some people call time frame continuity, meaning it's kind of like the alignment of multiple time frames. So some people might look at this even on a weekly, daily, and let's say 30-minute time frame. And what they're looking for is for the smaller time frame to retrace, so be the green ones going up. And when it starts to join or turn into the direction of the 2 higher time frames, you may have an impulsive, nice, strong move because you have the highest time frames on your side. So that's a lot of information, and this is a whole other session that I'm not doing right now. But it might be something that you want to look into because, like I said, your odds will increase when you have higher time frame bias on your side. That's my personal opinion, and that is something, yes, I will counter trend trade, but I also may choose my targets different if I know that the higher time frame is on my side, because price action might go further, stronger, for longer, because you have a higher time frame on your side. So that's just something to consider depending on the context of the day. So a lot of information there. So let's show some charts, because this is always helpful to see the visuals. So back to the question, how did the overnight trade? So look at this example here. We got the previous day on the left side, and then we have the current day on the right side. The circle is 7:45 a.m. Obviously, we broke out to the upside. We have an outside day. But what did overnight do? As you can see in this chart, overnight had a very strong, almost a one leg, it looks like one leg, straight up in the air, nonstop, all night long, from the overnight open. So this is very impulsive, this move. This can give a little bit of a red flag to try to counter trend this. This can give a signal that maybe you need to pay attention that this might be a runaway trend for the day going up. One more thing I consider, and do your own back testing. This, I believe, is a 1,000 tick chart. It might be a 500 tick chart. I can't remember, but it doesn't matter. It's still like my execution chart. I watched the MACD indicator, which is this indicator on the bottom. And I do use this for a couple of things. Like I mentioned in the first video, I like divergences and I like using it for overextended areas in certain circumstances. Now in a trending environment, overextended becomes more overextended. So it is a divergence nightmare. If that is something that you like to trade, you have to be careful and it has to be the right context. So if you pay attention, the middle of this histogram has a line. This is called the zero line. And when these lines are above it, right here, these moving averages, that can be a bullish signal. How do I interpret it as a bullish signal? I pay attention to the overnight session and I look to see, did the MAs ever come back under the zero line? So if you look from basically the start of Asia, we never came back. We stayed above the zero line the whole New York morning to begin. Look at this. This is 9:20 actually. Once you're like over here, so this is definitely a red flag for me that's telling me that the pullbacks are extremely shallow and that this is a runaway trading day that I don't want to counter trend. So the pullbacks are shallow and you got one impulsive move overnight. The MACDs are telling you that it's bullish. Price action is telling you that it's very bullish. You broke out of previous day highs as well. So this is putting all these little clues together and just having a checklist of how you define certain things. So here's another example of how did we trade overnight. This is a lot of good information that you want to pay attention to. So in this example, 7:45 is over here. You could see that we're beyond the previous day high. We broke out upwards. Let's look down at our MACDs. You can see that the MAs were above the zero line all night long. So I'm not trying to go short. I'm not trying to go short. Of course, I'm going to have higher time frame levels marked off because these could be turning points, but I have more criteria than that to counter trend on a day like this. For the most part, I've gotten chewed up and spit out on days like this trying to counter trend. It's much easier to go with the move that it's kind of signaling here. So this is another example of something, the overnight price action sort of giving you the clue. Another context clue in this case is the overall trend. So that was the move 2 days ago. You kind of had this little sideways action yesterday, and then today you broke back up. The context is uptrend, impulsive move uptrend. You got the consolidation, and then you get another impulsive leg up. If I were to go to a 60-minute or higher time frame, it would be cleaner in the sense that you would notice more. It would look like this. It's just more broken up because this is an execution smaller time frame. So, but you'll start to see it where you can consolidate the candles almost in your brain. Okay, so let's look at something that I kind of mentioned before, which is when you're on these outside days, you want to pay attention to the reaction when price comes back to the broken high or low, previous day high or low. So let's look at this example. 7:45 a.m. We already know we're outside. Context clue number 2, we can see that the MACD lines have stayed below the zero line this time, bearish signal. Now, I'm not just taking the MACD and just saying that's the only thing that says to go bearish. there's a few context clues I'm taking into account. We're outside the previous day low, the MACD lines are making sense, and I want to see what happens when we, or if we even, retest. So in this case, we retested and we held. So, and the MACD lines remained below the zero line. So this is a bearish signal. So again, this is a day you want to go with the trend, with the direction that it broke to the outside. This is that kind of day. And as you can see, even later in the morning, you had a strong move up like this and what appeared to be a reversal here. And that could have definitely been tradable for some reason. But again, we came back up here. And even though the MACD lines came up above the zero, this was the first time we were retracing this deep in the context of a big down move. So chances were we may have one more attempt lower. Now that's a lot of information, and you'd have to do your own back testing to sort of, you know, see how these things move in terms of retracements, impulse moves, etc. Okay, so now here's one more, last one about the broken higher low. So this was, again, this is the first one I had showed you guys. We have the pullback, and let me show you this one little MACD thing. So yes, we kind of were under here, sort of near the zero line, to be honest, but all morning you're doing a nice, beautiful grinding spaghetti situation as you're just going super grindy up. This is counter trends nightmare, trying to catch every single one of these bearish candles in the context of being outside the previous day range. You're better off, in my opinion, marking off that previous day high and seeing what happens if we come back to it. We had a nice pullback here around 10:30 time, and that gave us another attempt to the highs. Even though we came under here, this sort of was like oversold in the context of an uptrend, and then your chances are you're going to get another impulsive move up. So but always look at previous day price action, the way the day ended as well. You had such a strong end of day move. Look at the overnight. It barely came in. It barely retraced and broke out again. Impulsive. This is very impulsive trending environment, the way it looks. So it takes a lot of chart time to start to see this in real time, because of course, looking back, it's like screams at you. It's very hard to see it when you're here and none of this happened, and to trust it. And it's not always going to work. Of course, this can come back in immediately, do some kind of thing and do something crazy, and then do that. It can do anything. That's the way trading goes. But we can try to stack odds on our side based on previous experiences and what most likely happens. Because all we need is a little bit of an edge and proper risk management, and boom, you can make money. So why do we care about all this information? Here's why we care. Outside days can lead to strong trending environments during the New York session. This, to me personally, like I said, was a real thorn in my side. Why? Because I had a very rebellious personality in the sense that I loved to counter trend. And this was not the environment to do it. This was an environment that would take away my entire week's profits, because I couldn't give up that this went too far. This definitely has to turn around. Wow, it went past 1 ATR already. Trust me, when you think it went too far, it can go even further. So keep that in mind, especially with oil. So this is a big clue on just being careful counter trending in this type of environment. So this might just be a day, if you're not one to like trends, strong trends, or you struggle with strong trends, you may just want to stay out, or put your markings, put your alerts on the previous day high and low, and see what happens if we ever come back. Okay, so something that I've created that really helped me is, if you are interested in counter trending on a day like the ones I've showed you, it's very helpful to create a checklist where you choose what needs to happen, a clear set of criteria that what needs to happen before you will consider going counter trend. And it needs to be a strong list, not MACD lines flip over and cross. Moving averages cross. That's not good enough on a day like this. You need to have, I would say, at least 3 or 4 items of confluence that make sense, or price action something that happens in price action that tells you information that the other party has taken control. So when an uptrend, what tells you sellers may have taken control? What I mean by that. So one of my rules, out of many, on when I'm allowed to counter trend on a day such as this, I have to see divergence on a higher time frame. Which is, like I said, on that small time frame, your execution chart, you might see divergence left and right all night long, and you're just getting chopped to pieces. But for divergence to show up on the higher time frame at a key level, it may be a little bit more powerful. So that would be one criteria, followed by a change of structure on a smaller time frame. You need to define what a change of structure means to you. So for example, I'm coming up a strong trending day, and I see this. So maybe on the higher time frame I have divergence. Now to me, that's not enough. What I need to see for my change of structure is I need to see a broken level. So to me, when you have an uptrend, obviously you can see that the highs are climbing. I need to see a broken high, because that starts to give me a signal that perhaps we have a structural change. So there's a lot more to this, but it's something worth studying, because this, seeing something a little bit more than just every little red candle you see, you're going to be fighting against the current. And why? And then you're going to be exhausted by 10 a.m. in the morning with like break even P&L. So why are we going to bother with that? There's plenty of other days to trade. Another thing, another context clue, or another reason why we care as to understanding the environment, because there may be a type of strategy that's appropriate for a day like this. When you have a strong trending environment, a hyper trend, let's call it. I call them hyper trends when it's literally like one straight leg just moving all morning. It seems like that. Even on a 60-minute, you just have huge candles going in one direction. Those are very difficult to trade. So the reason why I'm saying it's difficult is because I tend to like pullback strategies. I like price action that moves like this. It's easier for me to see, it's easier for me to measure and prepare for them, etc. What happens when it's this? This is extremely hard for me, but this may be a wonderful environment for breakout strategies. Some people, because you don't really come back. So maybe, I'm not saying how to trade and I'm not setting up, putting a strategy here. I'm saying that some people they'll wait for a low or high to break and they'll just jump right in, or they'll, have another way to do a breakout. I'm not really sure. I'm not a breakout trader, but that might be the context that you're willing to pull out that sort of strategy. So that's all I'm saying. We already spoke about the tip regarding the MACD lines. Have they stayed above or below the zero line all night long when you show up? That could be a red flag that a hypertrend is in place. You don't want to be the first one trying to catch that opposite leg. In most cases, yes. Can we have a V reversal where it completely reverses everything from the overnight? Yes. I've seen it before and I've gotten frustrated about it. But then I remember that more cases are not like that. More cases are a pullback and another push up in the direction before it would even try to turn around. So that's just my own personal experience with oil. Been trading it for many years now. So everyone, has to do their own back testing and trust their own system. And obviously, it's always important to keep the higher time frame trend in mind. Outside days can and will hit key levels where they will reverse. It may not happen during that New York session, but it could happen during the next London session, etc. We want to mark these because if it's too close, it may not be enough risk to reward that's worth it to you. So you want to make sure you have profit potential. Okay. So last thing here, where can price go on these types of days? Now, as I said before, this is not a strategy, entry, exit, stop placement kind of session. But I do want to give you an idea of how I look for where price can go, because sometimes it just feels like it's going to go to the moon or all the way to the floor. I definitely pay attention to previous week key areas, the open, the high, the low, and the close. I even pay attention to the monthly open, the current month open, because like I said, is the month red or is the month green? I like to ask myself that question. And sometimes we'll retest that area. but the previous week is extra important to me. I see these areas tested very often. Pay attention to any key swing highs or lows from a higher time frame. Why do you pay attention to this? It's great to mark these off because think about it like this. Price is searching for liquidity. They're looking for someone basically to take the other side of their trade. And where are their beautiful orders sitting? In the obvious stop placement areas. So when you have price coming down like this, let's say this is a 60-minute chart, and we're climbing up, and we have, let's just pretend this is the outside day right here. It starts right there. I'm going to pay attention to this swing right here. I don't know why I'm using the same color. I thought I wasn't. Hold on, let me find a better color just to show a difference. I was trying this thing for this orange for Halloween. Right here, I'm going to pay attention to that area because I believe that stops might be placed above there and price may want to aim for that and take the stops because the stops provide liquidity for the people who want to go short. Same thing for this little key swing. So pay attention to the key swings as potential key areas where price might want to reach for. Lastly, I'm a big Fibonacci trader. That's also outside of the scope of the session. I might do a Fibonacci series one day, but for now, just throw out some targets here. These are just technical targets. I marry this with price action, which is king. Price action, naked candles will tell you everything you need to know. I like this just as an odds enhancer and just as a mechanical number for my brain to grasp. So basically, you have your movements and say you're in here, your fib extension will tell you this would be 100% fib extension because it's basically an equal measure of this leg here. So it's this, and that's an equal measure 100% of that leg. Then you have 127.2, so it'd be a little longer like that. Then you have 161.8, it'll be a little longer like that. So these might be targets that trending environments might try to reach for. Like I said, I use these with confluence of price action clues, context clues. So hope that was helpful. Like I said, the next and last video would be discussing transition days, which can be a little bit more complex because these are inside days that turned into outside. These are outside that turn into inside. How do we act once that transition has happened? So if you want to get more information and updates, please subscribe to the channel, like the video, let me know you're enjoying the information. You can put comments below, and that's my Twitter handle right there. And I will see you in the next video. Thank you.